Picture this. A rough, glittering stone worth more than most people earn in decades wedged deep in the ground of a landlocked nation. Botswana, once dirt poor and overlooked, now holds the world's most dazzling secret. It is the biggest diamond exporter by value, and India is eager to get its hands on those gems. But how did Botswana go from a near-barren economy to a diamond powerhouse that fuels dreams in New Delhi, Surat, and beyond? And what if I told you that a handshake signed this year could tip the balance even further, changing how India sources its sparkle forever? Stick around, because the story behind a tiny African country and $1 billion sparkle trade is more powerful than you think. And in the next few minutes, we'll crack it wide open. In the decades after gaining independence in the mid-1960s, Botswana was one of the poorest countries in the world. There was barely any infrastructure, education was a luxury, and the future looked bleak. Then, in 1967, just a year after independence, geologists struck gold, or rather diamonds, at Orapa. Suddenly, a country with almost nothing had the most valuable stones beneath its soil. That discovery transformed everything. The government teamed up with De Beers to form Botswana, a 50-50th joint venture that would control diamond mining from the very beginning. By the early 1970s, Botswana was building mines at Orapa, followed by Lethokane, Jwaneng, and Damcha, all run by Botswana. These mines didn't just sprout up overnight, they were translated into hospitals, schools, airports, and a foundation for development that lifted Botswana inch by inch from poverty. And yet, that was just the beginning. In just a few short decades, diamonds came to account for around 80% of Botswana's export revenue and about a quarter of its GDP. But that story continues. And soon, you'll see how much more was at stake, especially with India waiting on the other end of the trade. If diamonds are the prize, India is the artist. While Botswana mines the stones, India, especially hubs like Surat and Mumbai, transforms them into the cut and polished gems the world demands. India imports massive amounts of rough diamonds from Botswana, and then shapes, polishes, and exports them globally. For example, India's imports from Botswana hit over $330 million in 2024-25, with diamonds being the core commodity. India also exports machinery, pharmaceuticals, and even its own polished diamonds. Back to Botswana, in global networks, India and Botswana are locked in a dance. Botswana supplies the rough, India shapes the elegance, then sends those shiny pieces to markets across the world: Europe, the US, the Middle East. And here's the twist: India wants more control. The landscape in 2025 isn't the same as it was in 1967, and as you will see soon, that changing dynamic is reshaping the rules of the game. Remember Botswana? Well, it became central to an epic shift in control. After years of negotiations, in early 2025, Botswana sealed a new diamond sales agreement with De Beers. For the first 5 years, Botswana's share in the joint venture's diamond sales would rise to 30%, then go up to 40% in the next 5 years. And if all goes well, an optional extension could take that to an equal 50-50th split. Mining licenses were extended to stretching the agreement into 2054. This agreement was more than a business deal, it was a symbol of economic sovereignty. Diamonds had made Botswana rich, and now Botswana was saying, "We're ready to take the wheel." Botswana was reacting to economic strains too. In 2024, diamond exports plunged down nearly half from $3.6 billion in 2023 to just $1.95 billion. Blame shifting consumer demand, market saturation, and the rise of lab-grown alternatives. Yet Botswana wasn't backing down, it was negotiating its way forward. And with India depending on its rough stones, this shift rippled across the entire industry. But what about the human story behind the jewels? Next, we'll peek into the workshops and factories where that rough gets polished, where real people make the magic happen. Diamonds aren't just numbers, they're shaped by hands, and sometimes those hands tell a troubling story. Botswana's first sightholder polishing factories opened around 2003, employing thousands, all of whom were promised prosperity through the diamond boom. But as insider reports revealed in 2024, the grim reality painted a different picture. Workers, mostly women, described hazardous conditions: black carbon dust coating factory walls, flimsy masks that did little to protect lungs, coughing and rashes that were everyday companions. Their voices, often anonymous, whispered, "They treat us like slaves." Despite working above the minimum wage, many earn between 1,900 and 2,500 pula per month, barely a third of a living wage. A single mother might support a whole family on that. Temporary contracts meant little stability, and incentives were often withheld. "This company is going to kill us," said one worker. "It's a tension most consumers don't see." Botswana has earned a reputation for ethical, clean, conflict-free diamonds. But beneath that legend, the realities of labor, dusty lungs, meager wages, fragility are too often ignored. Botswana had opened an economy, but now it had to reckon with the well-being of the people holding its success together. Next, let's zoom out again, because back in the big picture, Botswana is making strategic moves to hedge its bets. If diamonds are losing their shine globally, Botswana is betting its future on more than gemstones. The landlocked nation has launched a bold diversification strategy, seeking investments in areas like tourism, agriculture, energy, and manufacturing. One of the biggest signs that Botswana is preparing for a post-diamond era? A $12 billion investment pact with Qatar's Al Mansur Holdings signed in August 2025. It is shaping up to spearhead projects across multiple sectors, signaling a strategic pivot. Meanwhile, the Pula Fund, Botswana's sovereign wealth fund, has been actively investing diamond surplus into infrastructure, development, and diversification to cushion the blow of falling diamond revenues. Botswana's leaders know diamonds can sparkle, but they also know the world changes. If synthetic stones, tech shifts, and market slowdowns threaten the glitter, better to innovate now than scramble later. And yet, the dance with India continues. India is looking for reliable rough supplies, and Botswana is adjusting the terms of engagement. Which means the next act of this story could revolve around shifting trade dynamics. India, with its diamond-cutting hubs, is feeling the tremor of these shifts. U.S. tariffs, synthetic diamond pressure, and now Botswana's new terms are changing the puzzle pieces. India must adapt, Commerce Minister Piyush Goyal recently proposed. India supply cars and dairy to African nations, in exchange for diamonds, gold, and agricultural goods, a signal of India seeking stronger partnerships across Africa. With Botswana capturing more of the value chain, India may need to negotiate harder or diversify. They could invest directly in Botswana's polishing plants, strengthen trade in other sectors, or seek alternative rough suppliers like Canada or Namibia. For everyday consumers, what does this mean? The diamonds on your finger may soon have a different backstory, one where sapphire bright shifts in geopolitics, economy, and ethics shape each sparkle. And that brings us to the final question: what's next for Botswana and India? How will this high-stakes, deep-rock partnership evolve? Let's bring this to a close, but first, remember how this all started with a single diamond strike that changed a country forever. Botswana began its journey with a lucky discovery. A diamond strike in 1967 made ecological and economic history, lifting it from one of the poorest countries into a diamond empire. Decades later, India became part of that story, buying rough cuts, spinning them into glitter, and carrying the legacy forward. But the world doesn't stay still. By 2025, diamonds are no longer a guaranteed boom. Prices cratered, consumer tastes shifted towards synthetic gems, and in response, Botswana took back control. The new De Beers Agreement tilted power, laying the groundwork for economic regeneration. Botswana would earn more for its stones, extend its mining licenses, and invest its wealth in long-term resilience. At the same time, the human story in the polishing factories couldn't be ignored. The black dust, low wages, and fragile contracts belong to a chapter that asks, can prosperity and ethical labor go hand in hand? And if not, how can we write a new ending? Botswana's answer: diversify. From solar energy to tourism, agriculture to manufacturing, the $12 billion Qatar investment signals a future where diamonds shine but don't define. For India, the script is changing too. Trade isn't static, and with diamonds at the heart of a shifting geopolitical runtime, India may reforge its ties with Africa. In the end, this is more than a gem story. It's about transformation of economies, societies, and relationships. When you next look at a diamond, know it carries the weight of a nation's ambition, another nation's craftsmanship, and the choices of people on both ends of that sparkle.